Good morning, Predicted Trades family. Hope everybody's doing well. Oh, we had such a fun day yesterday in the room. Let's do a quick review. On ES, we had a decent pre-market that started a nice uptrend. We pulled back pre-market and held that daily Keltner, and then started to push back up again. Opened, barely took a dip, and just started ripping. First day in a while where the first direction was up instead of down. We did run into trend lines from low of year. That's these trend lines you see here coming up from below. Ran into those on Tuesday, held them overnight, and again pre-market. So you could say hitting the trend lines from low of year did wake up some buyers that got us back up. We went from that second Keltner down right up to that first Keltner and almost to the daily 8. You'll also notice a 4-hour squeeze that we hit on Monday and overnight. And then Tuesday, we went from the bottom to the top of that 4-hour squeeze. That 4-hour squeeze is now technically firing to the upside. Another thing to note, in our run up, we got over all moving averages from lower time frames. So from 4-hour on down, we got back above our moving averages that were pushing us further down. We made it all the way to the 4-hour 45, which, as some of you may know, I like to teach with moving averages. 21 is key, this white line, and 45 is kind of the last stop to flipping the trend from, down to up or up to down. For today, the premise becomes very simple around these moving averages. Basically, now that we are above the 45, we can dip only as far as the 21, which is now caught up to our key level at 39.53. If we go any further below that, we count it as a rejection that can take us right back down to recent lows. So today, 39.53, very key level of support that we need to hold if we do take a dip to see continuation and a full flip of this trend. But before we dig too much into where we could be going today, let's take a quick look at the economic calendar. It is Thursday. We'll get our initial jobless claims at 8:30, and then Powell is speaking at 9:10. Not 9 a.m., not 9:20, not 9:15, but for some reason he's starting at 9:10. We have a little bit of more economic data that comes out after that, and another Fed speaker, but not expecting too much of an impact there. And then tomorrow we have a couple of things at 10 a.m. and at noon, a couple more Fed speakers. If we start looking to next week, we have some CPI data coming out, some producer price index, more jobless claims, and University of Michigan data. So pretty light on economic calendar events coming up. Another little thing I'll showcase to you guys. I've shown you guys my moving average cloud that I'm going to share with you guys here pretty soon. Just kind of buttoning up the code on that to make sure it's ready for you all. I took a couple of instances of that tool and I turned everything off except the 45 moving average from every time frame. So down here we have our 15-minute and 30, then hourly, then 2-hour, then 4-hour. And you can see yesterday, just those moving averages provided an awesome roadmap. We got through, pulled back, and held. So it starts a premise of if we're holding and we're going to try to take out these 45 moving averages on each time frame, we have the potential to go from our 15 and 30 minutes that we held up to our 4 hour, and that's exactly what we got. That's what allowed me to hold our SPX contracts yesterday a little longer than maybe I normally would have. Just a little thing I wanted to showcase. We'll get into that when I release the tool. So for today, we got back above that first Keltner. We hold it overnight. 30-minute squeeze has set in with our overnight action staying in such a tight range. So now we have a nice range to deal with at open. 30-minute squeeze will help provide direction, and we'll play that range until the range breaks. Overnight, we've tapped the daily 8 a couple of times. So if we can hold this daily Keltner, squeeze bottom, and at the very least, if we slip down, we need to hold 39.53. Hopefully you can look left at the price action to see 39.53 was a point of rejection along with 61, kind of making a zone of rejection that sent us down Tuesday. Now we are back above that zone. So at the very worst, if we do dip at open, some profit taking, we need to see this zone hold. So if this zone or the 30-minute squeeze bottom can hold us and allow us to start moving higher, first stop is at daily 8 and these overnight highs, psych level of 4,000, and then this 40-20 zone that we rejected last Friday. We fought to it with some nice longs that we traded, and then when we hit it, we started shorting back and got a great dump. Again, from the top of a 4-hour squeeze to the bottom. Now we've gone bottom back to top. So for upside, need to get through the daily 8, 4,000, get to this 40-20, and ultimately the daily 50 is up above, along with a trend line from the highs that we've been selling off from. So upside targets today, that daily 50, 40-20, this trend line, and if we just have epic continuation, we have the daily 21 up above at our next key level of 40.56. Also have the daily 15 sitting there. So key upside targets. Should we start to give out our zone of support, then we're going to engulf back down and start hitting these key levels. And we could get back down to test this trend line again. We are in a wedge. I'm sure we're all used to wedges on lower time frames. They work the same on higher time frames. So let's see if we get our continuation to the top of the wedge, if we start to slip back down into the middle to revisit the bottom. Go to NQ. So, for NQ, very similar scenario. We got back up above our resistance that we had at 12,100. That turned into support. If you see these wicks, it's very clean. That's why we mark these key levels. That's why when I share them, you guys should mark them too. They will be important. They will be resistance, turn into support. So now we're above 12,250. This key level we're trying to hold pre-market. For NQ, we are starting to kind of run into the more extreme trend line from highs. We kind of have a less extreme one that sits back up above the daily moving averages, 21 and 50 and 15. So on NQ, we got our 30-minute squeeze to help provide direction. If we start to slip below that, want to see us hold 12,200. So that's about the furthest I'd let it slip for a bounce for continuation. If we start to give out that 12,200, likely coming right back to 100, and then that daily Keltner, and that psych level of 12,000. If we can continue to hold 12,200, this 250, this 30-minute squeeze, and come up to visit yesterday's highs, overnight highs, get through the daily 8. We've got about 12,450 that we sold off from on Friday. And then past that psych level of 500, and then our moving averages. Let's see, we close kind of near, let's just call it that 250. So yeah, we can get up to the daily 50 on another full ATR kind of day. Yesterday was pretty much a full ATR on most things. So play this little range until it breaks. One other little thing I was going to point out. Sorry, I meant to on ES. What does a rejection of this 4-hour 45 look like? Well, luckily, we just had one right back here. So if we see, we fought up to the 45. We even peaked a little bit above it. This was this is a couple of Fridays ago. And then we came down through, let me zoom in so it's a little easier to see. So we got above that 45, but then we came back and gave out the 21, and we dumped back down. So just to give you an idea of fighting up to it and rejecting what that looks like, because we're at the same spot where we fought up to it. So we have to hold that 21 for continuation, or else we get a rejection back down. Sorry, just one thing I wanted to point out. And on NQ, we covered upside, downside targets. So now on to Ruddy. Ruddy, nice fight back from that second Keltner, down, back up to that first Keltner. Didn't quite get above it, and resisting it, pre-market. We are also back above our trend lines from last Thursday and Friday. And this wedge that I made Tuesday, pre-market prep. We're back above that wedge, and it's cutting through this 30-minute squeeze. So once again, I'm going to use this wedge as an alert. And just for the sake of argument, I'm going to make it a little less extreme and include this low from overnight. There we go. So now if we start to take out that wedge, I'll get an early alert before we take out the overnight low. But on Ready, looking for the 30-minute squeeze to hold, I would only let it dip as far as 1820, sorry. If those can hold, start to send us back up for a stop this daily Keltner at 30-minute squeeze top, pre-market high, the daily 8, and the daily 50. The psych level of 1850 as well, where we sold off from last Friday. If we start to slip below 1820, we can easily come back to about this 1808, 1800. YM. On YM. Pushed off of that second Keltner. Fired smaller time frame squeezes up. Got back to this 3616, which provided some resistance. And just like on everything else, looking for YM to hold 30-minute squeeze bottom. At the worst, dip down to this 462. If we can hold there, get back going to the upside, overnight highs, which we are actually pretty close to. YM's looking a little stronger right now. So a little relative strength in YM. Let's take a quick look. Yep, see, percentage-wise, this is how I try to look and see who's leading. Percentage-wise, YM is up more. NQ and Ready are kind of lagging. So we might see some early YM rotation. We might see NQ take a little dip. All things we should be aware of and prepare for. So YM, if we can hold, squeeze bottom or 462, looking to get up through pre-market high, through that first Keltner daily 8, get back to this 31,800, and if we can keep trucking, 32,000 psych level that we sold off from last Friday. We start to give out this zone, likely going to engulf back to that Keltner that we pushed off of. At the least, so on to Apple. Apple had some pretty tight squeezes yesterday, but as you can see, it did a great job holding our zone here at this 153.8, 154.7. Held it on Tuesday, slipped down yesterday to hold it again. Did set a lower low by just a few cents, but then right back up and pushing off of this zone. Got up above 155, which is now pretty much the bottom of our 30-minute squeeze. Not loving that Apple is kind of looking weak pre-market and already making H's. It could easily slip back to this zone for a test. But as we saw yesterday, we don't necessarily need Apple to clear 5 points for the market to, completely rip. Plenty of other names were very strong out the gate while Apple lagged. So even if it lags today, we can still get our continuation. For Apple, let's see if we can hold 155, the squeeze bottom, start to get back up through pre-market highs, yesterday's highs, in an attempt to get back to this daily 50, that first Keltner, and the daily 8, which sit up at the top of this 2-hour squeeze. We did come off the bottom of the 4-hour squeeze, so if we can get continuation, we're also looking to get back up to the top of that 4-hour squeeze, which sits at our next key level of 159.5, which is basically where we sold off from last Friday. But if everything is weak and gives out, likely coming back to this zone, the squeeze bottom, anything past that, we're talking about third Keltner down around 150, and our key level, 148.9. But if we're doing that, then market has rolled over to engulf, and maybe he's setting new lows. So, let's see if this 4-hour squeeze bottom can provide support. This 30-minute squeeze bottom, psych level 155 for Apple today. We do have our econ data, our jobless claims coming out in about 10 minutes. So we'll see if that starts to tank us back down to our zone that we need to hold on ES, or if we sit for a little bit before open. AMD made a decent recovery yesterday, back to where it sold off from on Tuesday. And a nice little gap up, actually. NVIDIA also made a nice recovery. So the gap up is very interesting. Might be some relative strength compared to something like Apple that's slightly gapping down. On NVIDIA, let's see if pre-market lows and this 79.8 can hold us. If not, if we start slipping on econ data or whatnot, we're likely coming back to 79. If we can get a bounce and some continuation through our pre-market highs, we'll have a daily Keltner right around there. If we can keep going, looking to get back to this 82, 83 that we sold off from on Friday. If we roll back over, back to this 78 and 77, where the third Keltner sits. Amazon, Big Zon. So definitely relative strength in Amazon yesterday. Like you saw, Apple took a dip, then kind of came back. Well, Amazon ripped up and almost made it to where we sold off from on Friday. So pay attention to relative strength when it shows itself. And this is a great trade. Richie called out yesterday in the room, those 130s. That went, I believe, a full triple from where he called it out. So great trade there, Richie, on those 130s. It looks like we got a slight gap down, so this not swinging them was a decent idea there. For Amazon, let's see if we can continue to hold this pre-market low. If you look left to where we sold off from on Tuesday. So if we can hold that, call it 128.5 on a little dip. Looking to get back up, take out pre-market and yesterday's highs, hit that psych level of 130. And if we can continue up to this 4-hour squeeze top around 131, which is where we sold off from on Friday. Past that, we got the daily 21 and daily 15. If we give out that 128.5, likely coming back to test 127, our resistance from Tuesday. We'll also have the daily Keltner and daily 50 sitting right there for support and target if we do give out. BA. BA was strong out of the gate yesterday, which gave us some good confluence to the upside. I talked about how we need BA to hold 150, 152, and move its way back up above 155. Luckily, that's what we got yesterday. And gapping up. So some relative strength. Ultimately, need 155 to hold if we do have a little dip. And to the upside, if we can continue on this little gap up, looking to push off this daily 8 to get back up to the daily 21 around 160. If we start to lose 155, likely coming back to this consolidation around 152, 153. Cat. Cat, didn't get going as much as we might have liked, but we had all these stack squeezes, and we know that that can hold her back. Ultimately looking for 180 to hold today if we do have a little dip. You can see that we tried to hold it all week, so looking for 180 to hold. Start to push us up through yesterday's highs. First stop, getting back to 184 at the top of this 2-hour squeeze. And if we can continue through that, we've got some daily moving averages there as well. And 185. Google. Another one with very good relative strength yesterday. We had that 30-minute squeeze at bottom and 4-hour squeeze bottom as support. Looks like we dipped just a little to tag that squeeze bottom and that daily Keltner. And then we pushed from that daily Keltner up to the next. That's why we track these things, folks. You got a simple thesis, hold daily Keltner, try to work your way up to the next. We totally got that. The premise yesterday was if we can hold 106 and take out 107.5, which was our resistance, we can continue up to try to get to 110. And boy, did we get that. Right through 107.5, pulled back to hold 107 and 107.5, and made our way up to 110. So when I go over these thesis and prep every day, I highly suggest that you guys have a notepad up, whether it's on your computer or right in front of you. If you intend to trade Google, you should listen when I say it. looking to hold this and work our way up to that. It sets up an entire trade thesis. Those 110s yesterday provided a great trade. I think Watch hit them in the room with a couple other folks. So, for today on Google, would like to see it hold. 108.5 at the worst if we do take a little dip. Sorry, I'm just looking left to confirm that's the level I want to give out. Yeah, 108.5 is where I would like to see us hold if we do take a little dip. We do have a trend line from yesterday's high, overnight high, that's kind of holding us down. So, could continue to push us. Want to see 108 hold. You can see it was that 108.5. You can see it was resistance where we had this tiny squeeze. Then we took it out. So, looking for that to be support. If we can bounce from there, take out this trend line from highs. We're going to take out pre-market yesterday's high and continue up to 111 at the top of this 4-hour squeeze, right around where we sold off from on Friday. If we roll back over, if we lose that 108.5, the first stop is at 107.5. And you know, we can continue down to that 106. And golf up, just doing golf back down, we got to see. But if you caught any of my little discussion in live trading this morning, you know, Monday's sell-off on almost every name got key strikes like the 110 at their beast, right? As we came into the week, we're looking at a premise of we can go up to here, we can go down to here. We got down first, well, that landed all of our calls at beast. Then we engulfed back up. So those calls that hit beast provided a great trade. As we look at puts, even the puts that we may have hit or may have worked out on Tuesday, they're not quite to beast yet, so it does lend that we can continue up to these 4-hour squeeze tops. GS, great bounce off the daily 50 and off of a 4-hour squeeze bottom. She fought back up from 124 to 332. Nice. Above 330. Trying to hold it pre-market. At the very worst, want to see 329.5 hold. 329, 329.5. Would like to see that hold. First stop taking out yesterday's highs, 332, the daily 8, and then the daily 21 at 335. Past that, we have the daily, I gotta double check if it's a daily 100 or 200. It's daily 200. Got the daily 200 sitting up above at the top of that 4-hour squeeze as the next target past the daily 21. And before I move on, I do want that to be the daily 100. Because we're closer to the 100 on most names. So I'll make that little adjustment. If we give out that 329.5, we can come back to 326, 325 for a test. JPM. JPM held that daily Keltner around 113, wicked a hair below it, but then took right back off to the daily 8, 50, and the 21, and the top of that 4-hour squeeze. If we dip, want to see it hold, we'll just call it 115, that daily 8, daily 50, making a zone of support. Was a resistance. Now that we're above it, needs to become support. If we can hold and get back through yesterday's high, this daily 15 sits above it, this 4-hour squeeze top. And if we can get past that, back to 117.5 where we sold off from on Friday. 118 maybe? we do have that daily 100 and that first Keltner up by that 119 that we sold off from 2 Fridays ago. So a little relative strength here in banks. I mean, if we get another day like yesterday, we could be back to, we could be engulfing 2 weeks worth of selling. Meta. Meta, a little stronger looking than Apple. Decent run from 157.5 up to 160. Today looking for 159.5 to hold if we have a dip. If we can get through yesterday's high and keep trucking, we got the daily 8, a 2-hour squeeze top around 162. And if we can get through that, daily 21 up at 165-ish. If things roll back, going back to 158. Microsoft. Some decent strength in Microsoft yesterday. Looks way better than Apple, right? And holding up well. It had gotten down near third Keltner and tapped it on Tuesday. So it sets up the premise of trying to get back to the mean. On a dip, looking for 156.5 to hold. Kind of where we sold off from on Tuesday. So if 256.5 can hold on a dip, or if we just keep on trucking, because it looks like we're about to take out yesterday's high. Looking to continue up to 260 psych level. Past that, 4-hour squeeze top, the daily 8, sit around 262. And if we can keep trucking to 265, pretty much where we sold off from on Friday. We do have the mean and the daily 100 and the daily 50 and everything all stacked right around 268, 270. Which is not quite where we sold off from 280 2 Fridays ago. So she sold off hard, starting to try to scoop up to make U's. So first stop is kind of that 265 to make the first U before continuing up. If market and everything rolls back, we give out that 256.5, likely coming back to 254, 252. Netflix. Old Netflix. This is the one name that annoys me this week because I had a great premise and did not trade it. That will happen, right? Anytime in trading, we'll come up with a good thesis. It might happen too fast. We miss our entry and we miss the show. I don't like to chase in any circumstance, so I'm okay missing trades. The premise this week on Netflix was very simple, and it played out perfectly. It was if we gave out 225, we can go to 220, 215 to that daily 50. We got exactly that on Tuesday. And then it was if we can hold this Keltner, daily 50, yada yada, we can travel right back up to 225 in an attempt to get to 230. As 230 was the first target coming into the week. So she provided down and then right back up on Netflix. Looking a little bit weaker, already coming back a little pre-market. Looking for that 225 to hold again. In fact, just for the heck, I'm going to add a alert. Right at that 225. If we can hold there, looking to get back through, daily 8, 21, and 15. Hit that 230 psych level, and then work our way up to about 234, 235, where we have sold off from 2 Fridays ago, Wednesday, last Friday. So that's the upside target. If we start to lose that 225, back to 222, 220, 218. No, don't freeze on me. Come on, Toss. I believe in you. No. There we go. All right. Taking a quick look. Our economic data did drop, and we have not completely started tanking yet. Although we seem to be hanging near our pre-market lows. So let's see if before we open we do slip down to our zone. And it never ceases to amaze me how that 4-hour 21, 4-hour 8, which have flipped, now perfectly align with those two key levels that I said we need to hold. Never ceases to amaze me, and it just shows this whole game is by design, right? We moved up enough to pull these MAs right to key levels that we need to hold. Very interesting. So, yeah, I've covered Netflix. We can go back down, go up. NVIDIA. NVIDIA, made a decent little move, but very small move. Very tight squeezes. Down at third Keltner. So far down, it's dragged the daily 8 below the first Keltner. So chips just not getting the love right now. They are rotating into other things for upside. I'm just going to give chips a break. I don't mind missing them if they finally start to break out. Because they're not really doing it yet, right? QQQ. Some great trades yesterday on QQQ. Those 295, 6, 7, all got in the money. And we almost made it back to 300. Looks like we tapped it a little bit and printed above it, pre-market. We have our 30-minute squeeze. At the very worst, looking for 296 to hold if we do have a dip. The high that we rejected on Tuesday. And kind of what used to be support last Thursday pre-market. So at the very worst, 296 looking to hold, or at least that squeeze bottom around 297. If we can catch a bounce and start to get back up, psych level of 300. The daily 8 and the first Keltner will likely be right about that 300 at that 30-minute squeeze top. And if we can take that out, first stop 303, where we sold off from last Friday. And then we have the daily 100 and daily 50 sitting at 305. Yeah, daily 21 up at 308, yada yada. We also have our trend line from highs sitting up at that 308 where the daily 21 sits. If we start to lose that 296, then we can easily come back to 294, 292. And if we have a crazy rejection like we've seen in the past when we are testing these 4-hour MAs, we'll get back to that back to the weekly lows, right? The bottom of that 4-hour squeeze, which is still slightly intact. I don't care about Roku and Shop. They're not doing much. And Snow looks like it had a decent day. Relative strength in Snow. So we haven't covered this in a couple of days just because it wasn't really doing much. But should be noted, had a great reaction to earnings. Ran up to third Keltner. Came back to the daily mean and held. Now we're starting to push off. Didn't even need to completely fill that gap from earnings. And in fact, probably will update this gap now to be as far as we got to filling the gap. So just covering it real quick to say if we can continue to hold 175, this could provide a great trade. Firing this 4-hour squeeze up. If we can hold 175, got to take out 180. And then get back 180, 185, 190. All key levels that we sold off from. So that's upside. If we give out 175, we can come back to 170, where that daily mean is. And if we start to give out, we can complete filling the gap to that daily 50 and first Keltner down. SPX. One thing I'd love to point out, with so much selling that we've been dealing with, when we have a completely flat close to open, we should be prepared for a nice run up. We sell off, we gap down. We fill the gap, we go back. We sell off, this was a gap up. We fill the gap down and we sell off more. This was kind of flat, caught a pop, then back down, gap down, back up to fill, gap up, back down to fill. Just saying, with all of that action, when we have a completely flat open, it can lead to a great run back up. So on SPX, looks like we're having a slight gap down. Want to see 360 hold. 360, 350 if we do have a little dip. Almost made it back to that daily 8. If we can hold and get going, want to take out yesterday's high. That daily 8, psych level 4,000, and then get back to this daily 50, daily 100, sitting up at 420, 438. But if we start to give out 360, likely coming back to our zone at 336, 328. And if that can't hold, back to 3,900. SPY. SPY. Got above our 395.8. Very, very key level. At the very worst, don't want us to go below 394 today. Was support, then became resistance. We got to it, pulled back, got through it. So at the worst, 394 on a dip, but ultimately, really looking for this 395.8 to hold. Very key level. What we resisted on Monday, Tuesday. So would love for a hold there. That would be very bullish for SPY. And if we can get back through yesterday's highs, we've got our psych level of 400, which we almost tapped pre-market. We've got our daily 8, which will take a slight step down. If we can get through 400, just like on SPX, we've got the daily 50, daily 100, creating a zone up above. And we have the trend line from highs sitting right there as well, around 402, 403. Past that, the daily 21 sits at about 405. Upside targets, if we give out that 395.8, like I said, 394 kind of the last stop where I'd want to see a bounce, but if we give those out, we can come back to 392, 390 in this zone that gave us support. I marked this and shared it yesterday in prep, but it's an old gap fill on the daily on SPY. We did already fill this gap, but I marked it as we were approaching it, and it provided support. And it also lined up with our trend lines from low of year, right? So that's it for SPY. Tesla. Tesla, very strong yesterday. Coming into the week, was watching the 280 call where the daily 8 sat. We had our dip on Monday to that daily 100 and 4-hour squeeze bottom. And that's where those 280s hit our beast at around $1, $1.50, somewhere around there. They ran up to $5 on Tuesday. And yesterday, they just kept trucking. They got in the money and then some. So just mention it again to talk about when we come into the week, we have weekly thesis that we are building. We watch key strikes with our beast system to play out those theses, right? The thesis was to get to 280. We dipped first, but just so that those 280s could hit our buy zone right at the bottom of this 4-hour squeeze where we expect a bounce at a key daily moving average. So definitely go review that. I'm not going to pull it up now, but go look at that 280 call on Tesla with your beast numbers. And for those folks that say, oh, I don't have Tesla's beast numbers, well, today everybody's going to have all tickers because I'm feeling generous. So you can go back and look at that Tesla 280. But Tesla trucked right up through 280, pretty much made it to the daily mean. Got to it overnight, having a little pullback. We got our 30-minute squeeze right around pre-market low. So let's see if that can hold us. At the worst, I want to see 280 hold because it was resistance. We ran straight to it, pulled back, ran straight to it, pulled back, and then finally got through. So definitely looking for 280 to hold, that daily 8. If we do have a little dip out of this 30-minute squeeze bottom, if we can hold and start to get through yesterday's high, overnight high, this daily 21, got the daily 15 sitting around 287.5-ish. Psych level of 290, and we have that first Keltner up around 295. If we start to lose 280, coming back to test this bounce point at 276.75, and if that gives out back to the daily 50 around 272. UVXY, I don't cover it every day, but I'm going to cover it because the overall premise wanted to see us reject this 10.8 at the worst, 10.9, 11 at this squeeze top. Luckily, just started dropping as everything ripped right out the gate yesterday. And I wanted to see it get back to these daily moving averages in under 10 for upside, and that is what we got. For today, if we do have a little dip, I want to see UVXY stay under 10. Big key psych level, where we bounced. It was support. I want to see it become resistance now that we're back below it. If we get over 10, then we're probably looking at rolling over on the market. And at the very worst, this daily 21 and 8 going to be very close to 10. So if we do reach a little bit past it, it's okay to tap those and then get back below it. So if we're upside in the market, need to stay below 10. This daily 21 and 8, reject, head back down through our lows from yesterday, and start making our way to 9.5 at the bottom of this daily squeeze where this first Keltner down sits. But if we're going to roll back over, we're going to see UVXY get back above 10 to this daily 21, hold 10 on a pullback, and make its way back up to 10.5. For VIX, yesterday I talked about for upside on the market, we needed to stay below 27, at the worst 27.5 at this squeeze top. Luckily we opened below 27 and just tanked, and I wanted to see us get back to 26, 25.5, and 25, and we got all of those. So VIX is in between the daily 8 and 24.5. The daily 8 sitting just a hair above 25. So for continuation to the upside, we need to stay below I'm going to say below 25.5, right? We caught a bounce there yesterday. So I want to see that become rejection if we do get a little above this daily 8. So the very worst, I want us to stay below 25.5, start to come back down and take out 24.5 in a bid to get back to this daily 21 and daily 50 around 24. And if we're going to see some great continuation, I want to see us get down to this 23.3 where we bounced from last Friday. But if we're going to roll over, we're likely going to get back above that 25.5, make our way to 26, this daily 100, around 26.25, and a bid to get back to 27. So hopefully this is helpful for everybody. If you're new to Predicted Trades, check out our website. You can join our Discord server for free. Also in the description of this video is a link to join our Discord server for free. Every Thursday is a free day where we bring our paid service to our main chat so that everybody can have a chance to try out our system before they sign up for a subscription. Yes, on Thursdays you can come in, trade with us for free, test our tools for free, make money off our system to cover your first couple of months subscription. So thanks for tuning in today, everybody. Good luck, and we'll see you all in the chat.